Top three things in my notebook this morning: China, Germany, and the US 10-year bond yield. China and Germany I'll go through first. It is a good thing, by the way, that the rest of the world continues to exist despite what happened here in the U.S. in the last month or so, but that ended up being a good thing for stocks. We're at the all-time highs. In China specifically, up 1.6% this morning on the Shanghai Composite. That is now, number one, bullish for the year to date, up 1.3%, back in black for the year to date. Number two, it's a market that we've been starting to allocate some capital to in the Hedgeye asset allocation model. So again, this is on the heels of some growth stabilizing data last week. Don't forget that Chinese data that all came out on Friday, seeing some nice follow through there. And again, it's a new market to put some capital to work. Number two, Germany just continues to be fantastic. That's part of the Eurobull theme that we talked about in our global macro themes for the fourth quarter. Hitting all-time highs, I might add, which is interesting, and holding them, which is doubly interesting. Up 16.3% for the year to date, the German DAX. And this morning you get a German PPI number, and this is really the key. German PPI, Producer Price Index, falls to negative 0.5% year over year. So in other words, when you have a strong currency, in the case of the Germans, they have a strong euro, you get down inflation. If you get down inflation in a strong currency, you get real inflation-adjusted economic growth, which of course we liked 10 months ago in the U.S. and as much as we like it in Germany today. So that's a very good thing. Point number three, the U.S. 10-year bond yield. This is a very important line with a catalyst. Tomorrow you have the unemployment report. We finally get that report because the government shutdown is over. What will we do here? Again, 2.58% is the intermediate-term trend line for the 10-year bond yield, and we're sitting literally right on that number. I don't feel like we need to make a call on that number. I'm just going to let the market tell me what to do. If we break 2.58%, that's bullish for bonds. If we hold it, it's bearish for bonds. So again, watch that line with the catalyst tomorrow. That's the top three things.